Welcome back, everybody. Today, we're going deep on a guy a lot of you have probably heard of, Paul Tudor Jones.
Yeah, definitely a legend in the world of trading.
So 5 years, 5 triple-digit returns,
Mm.
navigated the '87 crash like it was nothing.
Yeah, it's the kind of track record most traders only dream of.
Really is.
Yeah.
But, what really fascinates me is how he went from this risk taker
Right.
to a master of risk management.
Yeah,
That's quite a journey.
it really is. And it's not just about market wins with this guy. It's also about personal growth,
Mm.
resilience, like how he bounced back from some pretty tough setbacks.
That's right. So let's rewind the clock a bit, back to his early days. We know he got the trading bug in college.
Oh, yeah.
He read an article about another trading legend, Richard Dennis,
Mm-hmm.
but it was his uncle, who was the successful cotton trader,
Oh, interesting.
that kind of opened the door to the real world
Yeah.
of trading for him.
Yeah. Made the connections, right. That's how it often works.
Yeah, exactly. So he connected Jones with this guy, Eli Tullis.
Ah, Tullis. Now, there was a force of nature. I mean, this guy was operating in the New Orleans trading pits.
Wow.
And Jones described him as a true sight to behold.
Really?
Yeah, handling these massive positions, but with this almost unnerving calmness.
Hmm. So it wasn't just about trading skills, right? This was something deeper, like a mindset.
Oh, absolutely. Tullis had this, emotional control that was just crucial in that high-pressure environment. I mean, you can't crack under pressure down there.
No kidding. So what were some of the key lessons that Jones kind of soaked up from this guy?
Well, Tullis really instilled in him a deep understanding of market dynamics,
Yeah.
especially this concept of moving volume.
Moving volume. Okay.
Yeah, he taught Jones to recognize when the market itself was dictating the exit point, not just when a trader, felt like getting out. It was about reading the cues of the trading floor, understanding the psychology driving the prices.
So less about individual intuition and more about recognizing when the whole market was kind of
Yeah.
moving in a certain direction.
Exactly. Imagine, right, a scenario where the majority of traders in the pit, they're all holding similar positions.
Okay.
They can actually kind of orchestrate a price movement designed to trigger stop-loss orders
Oh, interesting.
of those on the other side of the trade. Right. Essentially forcing them out of the market and creating even more momentum.
Wow. So Tullis was teaching Jones to anticipate those moves, like to play the game on a whole other level.
Exactly. Those were invaluable lessons, and Jones definitely took them to heart when he went out on his own. But his path to success, well, it wasn't exactly a straight line.
Right. We have to talk about that cotton trade,
Oh, yeah.
1979. It's almost like a classic trader's tale. The talented guy makes a bunch of impulsive decisions and nearly throws it all away.
Yeah, it really highlights the dangers of overconfidence
Uh-huh.
and the importance of sticking to your own risk management principles. So at this point, Jones is managing other people's money, and he builds this big, long position in cotton. But the market, well, it starts moving against him.
Oh, so he's looking at a loss.
Yeah,
But instead of cutting his losses, he does what? He doubles down.
he doubles down, probably thinking he could, predict the market's next move.
Yeah, it's that classic gambler's mentality. Try to get back to even.
Exactly. It's a mistake a lot of traders make, and it cost him big time. I mean, the trade ended up wiping out something like 60 to 70% of the equity in the accounts he was managing.
Wow. That's a tough blow, both financially and psychologically, I imagine.
It was devastating. I mean, most people after a loss like that, they might just walk away, right?
Yeah, I think so.
But Jones, well, he did something different. He had a choice. Give up or fight back.
He chose to fight.
He chose to fight.
Amazing. He didn't just, try to forget about it.
Yeah.
This loss, this near career-ending loss, forced him to kind of reevaluate everything, his strategies, his mindset, his whole approach to trading.
He did a complete 180, shifted his focus from chasing profits to minimizing losses, understanding that protecting capital was, absolutely paramount.
Yeah.
Don't be a hero. Don't have an ego, he said, emphasizing the need to constantly question yourself and your abilities. It was a complete transformation, and this newfound discipline, well, it became the bedrock of his future success.
So this wasn't just about, refining his technical skills. It was about going deeper, understanding his own psychology, his strengths and weaknesses.
Right.
What were some of the rules, the specific rules that came out of this period?
Well, one of the most fundamental, never average losers.
Hmm.
It sounds counterintuitive, But Jones realized that doubling down on a losing position, it was usually driven by emotion, not logic.
It's hard to fight that urge, though, right? When
Yeah,
you have to get back what you lost.
it is. But Jones recognized that sometimes the best move is just to cut your losses and, live to trade another day.
Makes sense.
Another key principle he adopted was adjusting trading volume based on performance.
Okay.
Decrease it when you're doing poorly, increase it when you're doing well.
That seems kind of obvious.
It does, but you'd be surprised how many traders let their emotions dictate their position sizing. Jones, on the other hand, advocated for a much more systematic, almost unemotional approach.
So don't let a winning streak inflate your ego,
Right.
lead to reckless bets.
Exactly.
And on the flip side, don't let a losing streak make you too cautious and miss opportunities.
Yeah, it's about finding that balance.
Yeah.
Managing risk while capitalizing on gains.
Finding that sweet spot.
Exactly. And maybe most importantly, Jones really hammered home the point of knowing your exit point before you even enter a trade.
Oh, interesting.
This isn't just about having a profit target. It's about knowing your risk tolerance, knowing exactly when you'll admit you're wrong and get out.
So having a clear exit strategy is as important as having an entry strategy.
Absolutely. It's about approaching trading with detachment, recognizing that any position could be wrong,
Yeah.
and preparing for that possibility.
So it sounds like he views every trade as a kind of hypothesis that he's constantly testing, right?
Yes. He's reassessing, adapting, looking for confirmation or invalidation. This disciplined approach, it really came from that painful experience back in '79.
Right.
It laid the foundation for all the success that came later.
So we've seen how a major setback actually set the stage for Jones to become this incredibly disciplined trader. But how does he do it? How does he see these market turns coming?
Well, he doesn't have a crystal ball, if that's what you're asking.
Right.
But he is known for being just a sponge for information. He's constantly talking to traders, from all corners of the market, getting all these different perspectives, insights.
Okay.
But here's the thing. He doesn't let those opinions actually dictate his own decisions.
So he's not just following the herd, even if it's a herd of successful traders.
Exactly. It takes a certain confidence, I guess, to go against the grain like that, especially when everyone around you is making different bets.
Yeah, it's got to be tough.
It is. And Jones himself has said, it can be unsettling to find himself on the opposite side of a trade from other really successful traders. But he trusts his own process.
So what is that process?
Well, it's not just about, crunching numbers and looking at charts. Jones talks a lot about intuition. He calls it putting his ear to the railroad tracks.
Putting his ear to the railroad tracks. What's that supposed to mean?
It's about sensing those subtle shifts in market sentiment that you don't always see in the data, those almost imperceptible changes in behavior, the cracks in the consensus that signal a potential turning point.
So it's about recognizing patterns, understanding the psychology of the market.
Exactly. And having the experience to interpret those cues. Remember, this is a guy who spent years on the trading floor. He saw firsthand how these market dynamics play out.
Speaking of experience, that brings us to the 1987 crash. Really a defining moment in his career. While a lot of investors were caught completely off guard by that plunge, Jones not only saw it coming, he profited from it.
Yeah. He was using this historical market model, comparing the '80s market to the patterns leading up to the 1929 crash.
Wow.
He saw these eerie similarities in investor behavior, valuations, market sentiment. It wasn't just one thing. It was a whole bunch of factors pointing to a potential bubble.
So he saw those warning signs that maybe others missed. But how did he turn that insight into an actual trading decision?
Well, he started reducing his long positions and building short positions in the stock market. And he went big on bonds, anticipating that flight to safety. His understanding of market history, coupled with what he was seeing in real time, gave him the conviction to make those bold moves.
It definitely paid off. The '87 crash solidified his reputation as someone who could not only read the market, but manage risk like almost no one else.
Yeah, it was a testament to those core principles we talked about earlier: preparation, risk management, and adaptability. He wasn't just riding the wave, he was anticipating where that wave was going to break.
This ability to anticipate and capitalize on market shifts, often going against the prevailing sentiment, it seems to be a big part of his approach. Would you say he's a contrarian at heart?
Oh, absolutely. He believes the best opportunities come up when most people are wrong. And it takes a certain courage to go against the grain like that. But that's where Jones thrives. He challenges conventional wisdom, tests his own ideas, until he's proven right or wrong.
But being a contrarian isn't just about being different for the sake of it, right?
Right.
It's about having a deep understanding of how the market works, recognizing those moments when things have gone too far in one direction.
Yeah, and Jones doesn't just rely on historical data and market sentiment. He also talks about using a time stop in addition to a price
Oh,
stop.
time stop.
Yeah.
That's interesting. So we all know about stop loss orders, right?
Mhm.
To limit losses if a trade goes against you.
Right.
But a time stop, what's that all about?
Well, it's basically a predetermined time frame that Jones sets for a trade. If the market doesn't move the way he expects within that time frame, he gets out, even if he's not losing money yet.
This is kind of a way of recognizing that sometimes the best trade's the one you don't make. Just because you haven't hit your stop loss doesn't mean you have to stay in.
Exactly. It's about understanding that market conditions can change really quickly, and clinging to a losing thesis, even if you're not in the red, can be really dangerous.
It's that discipline again, that ability to detach from the trade and avoid making emotional decisions.
Yeah, he's not afraid to admit he could be wrong and just walk away.
It's a powerful reminder that even the best traders get it wrong sometimes.
They do.
Now, we've talked a lot about Jones, the trader, but there's this other side to him, this dedication to philanthropy.
Right.
He's involved in all kinds of social causes, especially education and poverty alleviation. It seems like a bit of a contradiction.
Yeah.
How does he reconcile, this world of high-stakes trading with this world of giving back?
Well, I think Jones sees it as a natural extension of his values. He's incredibly grateful for his success.
He doesn't take it for granted.
Not at all. And he feels this responsibility to use his platform and his resources to make a positive impact.
So it's about giving back.
Exactly. One of his most notable efforts is the I Have a Dream program.
I've heard of that.
He was inspired by a story he saw on 60 Minutes about this businessman who pledged to sponsor the education of a group of kids from a disadvantaged community.
Wow.
He was so moved by it that he decided to do the same thing.
Incredible.
He pledged to sponsor the education of an entire class of sixth graders from Brooklyn, a really tough neighborhood. And it's not just financial support. He's providing mentorship, guidance.
So it's about investing in these kids' futures, helping them break the cycle of poverty.
Exactly. He talks about the multiplicative effect of helping one child.
How it can ripple outward, affect families and communities for generations.
That's the idea.
It's really inspiring to see someone who's achieved so much in the financial world, dedicating himself to something like this. It challenges that stereotype of the Wall Street trader.
Yeah.
Shows that success can be measured in more than just profits.
Absolutely. He also co-founded the Robin Hood Foundation,
Yeah, I know that one.
which supports organizations fighting poverty in New York City. It shows his commitment to giving back and using his success to create opportunities for others.
So it's clear that Jones is driven by more than just money. He sees philanthropy as a way to leave a real legacy. It's a side of him that doesn't always get as much attention, but it's really important in understanding the whole picture.
It is, and it brings up an interesting question. We've talked about Jones's journey, his strategies, his philanthropy,
Right.
but how much of his success is really due to innate talent versus, the skills he's learned, the discipline he's developed?
The classic nature versus nurture debate, and it's especially relevant in trading, where success is usually attributed to a bunch of different factors. What do you think? Where does that balance lie?
It really is a tough question. I mean, there's no doubt that some people are just naturally gifted at seeing patterns, at making decisions under pressure. But even with those natural abilities, you still need more than that to get to the level Jones has, right?
Yeah, reminds me of that saying, hard work beats talent when talent doesn't work hard.
Exactly.
And Jones, he definitely put in the work, seeking out mentors, studying market history, constantly refining his systems.
And he never let his failures get him down. That cotton trade in '79, the one that almost took him out, it became this turning point. It forced him to really look at his weaknesses and develop that more disciplined, risk-averse approach.
Yeah, it's almost counterintuitive. You think a major loss would make you run for the hills, but for a lot of these great traders, it's like it makes them stronger.
Resilience is key. The ability to bounce back, to learn from those tough experiences, that's essential in any field, but especially in trading. You got to have a thick skin.
So if we had to boil down the essence of Paul Tudor Jones, what are the big takeaways? What can we learn from this guy's journey?
Well, I think the biggest lesson is that success is a process. It's not just about talent. It's about always learning, adapting to the market, and really importantly, mastering the mental game.
Right. He understood that trading is just as much about managing your emotions as it is about, the technical stuff, being able to step back, make decisions based on logic, not fear or greed. That's what set him apart.
Yeah, and he never thought he had all the answers. That humility, being willing to question himself, that probably saved him from a lot of mistakes along the way.
And we can't forget about the philanthropy. It really shows that success isn't just about, the money. It's about making a difference.
He saw that he could use his success to do some good in the world, and he went for it.
So as we wrap up our deep dive on Paul Tudor Jones, I think we see this complex, fascinating figure, a brilliant trader, a risk manager, a philanthropist.
And a student, always learning.
Exactly. Well, thanks for joining us, everyone. Hope you enjoyed this deep dive. And remember, whether you're trading in the markets or just navigating life's challenges, stay curious, stay disciplined, and keep learning.